In today's video, I'm going to explain to you how to pass down hundreds of thousands, if not millions of dollars to your beneficiaries completely tax-free. I'm Raul Shah. I'm the CEO of DocShah Financial. We are a wealth management practice that helps retirees and pre-retirees with advanced tax planning strategies and full portfolio management throughout retirement. The slides you're seeing are directly from my retirement planning course that I teach at Hopkins University, which is also my alma mater. So in this case, we're going to use a very simple example here. We're going to use a case where an individual has two different accounts, a brokerage account and a traditional IRA account. Many of you watching have these two accounts, and even if you don't, the concept is still very important and you'll be able to take away and apply it to your own situation. Now, in a brokerage account, you generally speaking have long-term capital gains tax treatment if you hold your assets for longer than 1 year. In a traditional IRA account, you don't have long-term capital gains rates. You're actually subject to your ordinary income rate. So every dollar in that account is going to ultimately get taxed at your ordinary income rate at the time of withdrawal. Now, in terms of a beneficiary inheriting these accounts, it's actually very different depending on which account they inherit from, whether it's the brokerage or the traditional IRA. So for example, in a brokerage account, when you pass, the beneficiary actually does not pay any tax because the brokerage account gets a special treatment called the stepped up basis. So all of the gains are completely wiped clear for tax purposes, and the cost basis, right, the original value that the owner had bought the stocks or the investments for, all get raised to the fair market value at the date of death, wiping out all of the capital gains, giving the beneficiary all of the assets at the higher fair market value now. In other words, you pay no tax when you inherit a brokerage account. But if that same beneficiary were to inherit a traditional IRA account, well, they'll actually pay ordinary income tax on all of that income, and depending on that beneficiary's tax bracket, a big chunk of that could just vanish to taxes. So if we use this example here of a person with a brokerage account and a traditional IRA account, let's say they've got $500,000 in each, and they want to leave 50% to a charity. Well, here's the thing. We have to understand how both of these entities or persons inherit the accounts and what the account's tax classifications and rules are. If you just make your son a 50% beneficiary on the brokerage account and a 50% beneficiary on the traditional IRA account, and the charity a 50% beneficiary on the brokerage and 50% beneficiary on the traditional IRA, then what's going to happen is that the son is inheriting part of the assets from the brokerage, so he's going to get the step up in basis, but he's going to inherit the other part from the traditional IRA and he's going to pay tax on that amount. And if he's in a high tax bracket, like let's say 40%, well, a big chunk of that inheritance is going to get wiped away to taxes. Now, if we stop for a second, there's a very important planning point here, and one that I cover with clients of DocShah Financial when they're in similar circumstances. And that's the fact that charities inherit your assets tax-free, regardless of the account that it originates from. So if we want to be strategic, what we're going to do is we're going to say, hey, let's make the son the 100% beneficiary of your brokerage account, and we'll make the charity 100% beneficiary of the traditional IRA account. And now the son's going to inherit the brokerage, receive the full step up in basis, and pay no tax. He'll get the full $500,000. And the charity will receive the full IRA of $500,000, and they won't pay any tax anyway because they're a charity. And so what we've done here is originally we had a situation where some of the money was going to go to charity, some was going to go to the son, but some was going to go to tax. And we've replaced that situation with a new one where the charity gets money, the son gets money, but there's no tax involved. So everybody gets exactly what you wanted when you originally set up the accounts. And that's the beauty of really good financial planning, really good tax planning, and just general financial and investing education. This is something that I cover with clients of DocShah Financial. We have clients that like to give to charity, who want to make sure that their beneficiaries are getting everything that they intend to. If you would like to discuss your personal situation with me and how I could help you, just shoot me an email, raul@docshahfinancial.com. I'd love to hear from you. And until then, subscribe, and I'll see you in the next video.